Want higher returns? Then ask yourself, are you ready to take risks? Let's see how well you understand the balance between profit and danger. Which is usually riskier? Answer B. Stocks have higher volatility, but they also offer greater long-term growth potential. What is the risk-return trade-off? Answer A. Investors are rewarded for taking calculated risks, not for gambling. How can an investor reduce risk? Answer A. Diversification spreads your money across assets, so one failure doesn't destroy your portfolio. What should you do when the market drops? Answer B. Market declines are normal. Patient investors often profit when others panic. Which investment is considered low risk? Answer A. Bonds offer lower returns, but they provide stability during market turbulence. What is volatility in investing? Answer A. Volatility measures how much prices move. High volatility means higher uncertainty. Which emotional trap often leads to investment mistakes? Answer B. Fear causes investors to sell too early, and greed pushes them to buy too late. What's the best way to manage emotions in investing? Answer A. Long-term investors focus on fundamentals, not daily fluctuations. What kind of investor takes calculated risks for higher potential returns? Correct answer C. Aggressive investors seek growth and accept volatility, but still use strategy, not luck. What's the golden rule of investing? Answer A. Preserving your capital matters more than chasing big profits. You've just learned how risk and reward are connected and how smart investors balance them. If you enjoyed this, continue to our next quiz in the Investment Strategies series. Subscribe and keep sharpening your financial mindset.